Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Eli Lilly. It had a sales peak, but shares are taking a hit. Yeah, Lilly shares are down about 14%. There is something overshadowing that. For that, we're going to bring in Damian Garde, Bloomberg News Health Reporter. Damian, thanks for joining us here in the studio. So it looks like this drug, experimental weight loss pill, and that's the thing here, it didn't do as well in this study as Wall Street had expected.
Exactly. So it met its goals and it helped people lose weight, which was the whole point of it. This was enrolling people with obesity, but that weight loss was about 11% of body weight. And Wall Street was hoping to see something more akin to 14 to 15%, which would match what's seen with the injectable GLP-1 weight loss medicines like Wegovy from rival Novo Nordisk. So despite the trial being a success and despite this pill seemingly on the path to winning FDA approval and hitting the market as early as next year, the reaction, as you mentioned, was dramatically negative for Eli Lilly because these, single-digit percentage differences are perceived to be massively important to the ultimate financial future of this medicine.
Here's the thing for me, knowing someone that does this GLP-1 thing, whatever it is, you gotta reduce the side effects of the nausea, and this one didn't. And that was I know people that use it and use the injection are saying, boy, when the oral one comes out, I'm told that the side effects will be dramatically less, which is a huge selling point. And I guess that's not what they saw here.
Basically, in this study, they saw gastrointestinal side effects that were comparable to the injectable one, which to your point could be viewed as a negative. I think there was a home run scenario where Lilly's pill would both lead to a greater percentage of body weight loss and, as you mentioned, have fewer of the nausea, vomiting, unpleasant things.
We being the pharmaceutical biotech industry, we're in the early innings of this GLP type obesity thing. I can't imagine why it's not going to get better and better and better and better. Or I don't know the science. Maybe we're already at that limit. We are at the limit of this, whatever this thing is.
I don't think so. I mean, and granted, clinical trials need to play out. Science, biology, famously unpredictable. But I would say the space is moving in two directions. One, combination medicines that add GLP-1 to other things that can lead to more dramatic weight loss. And then two, more convenient things like pills that you can take that maybe don't have the same effect on body weight, but that would be cheaper to manufacture, presumably cheaper to acquire for patients because these injectables have list prices of in excess of $1,000 a month. So in the best case scenario, let's say 5 years from now, there will be an armamentarium of weight loss medicines. An armamentarium, which I think I stumbled over, a whole bunch of them, like an armory, let's say. So a physician could, diagnose a patient and say, for some people, you will need an injectable that you can lose 25% of your body weight on. For some people, you may be good with an oral medicine where you lose a single digit or even 10% of your body weight, or mixing and matching using one for maintenance. And the upside being, theoretically, this will, one, become a massive $100 billion market for the pharmaceutical industry, but two, have knock-on beneficial effects for people's health.
So where do we stand with the pills? I mean, what other competition is out there? Who else is working on one that we should keep an eye on as well?
So Novo Nordisk has an oral version of the injectable Wegovy. Okay. It is not as convenient or I would say innovative, frankly, as Lilly's pill, because it's basically just a bunch of Wegovy shoved into a tablet that you eat, and it sits in your gut and administers the drug there. And that it comes with restrictions. You can't take it with food. You have to do it in the morning. It's not really as attractive a commercial product, I think it's fair to say, as Lilly's. But there are other oral options from smaller biotech companies that we may see them progress to the market. There's also a lot of M&A speculation around these firms that a company like Pfizer, for example, which kind of crashed and burned with its first attempt to make a GLP-1 pill, might acquire them. So this is very much a space to watch. I would say a year from now, it's quite likely that it will look demonstrably different than it looks right now.
So as I look at the PGEO table, which kind of breaks down where the revenue comes from Lilly, where is the cardiometabolic health? Is that the sector it's in? All right, that sector is 65% of total revenue. So that's a big deal for Lilly.
And that's not inclusive of this oral drug, which isn't even approved yet. So, I mean, as you mentioned, these data overshadowing, Lilly had like a blowout quarter. Their approved medicine for obesity, and the same thing is sold for diabetes. Both of them beat estimates. They raised revenue guidance and profit guidance. They're doing very, very well. But I think the stock reaction today is sort of an illustration of just how much is baked into the potential of these medicines. Lilly has flirted with being $1 trillion valuation company. They're not there anymore, but that's strictly a reflection of what people believe will come of this class of medicine.
So speaking of the potential then, so why is the science behind these pills? Why is it such a challenge?
I mean, getting what you can do in an injectable medicine, getting that down into a pill has bedeviled the drug industry for many, many years, because there are safety concerns, there are dosing concerns. The ideal product is like a super pill that prolongs your life and et cetera. But there's a reason we have so few of those. And it's basically just the trial and error and the unpredictability of biology. And I think these companies are always trying to bend the curves of failures, but like it remains true that roughly 1 in 10 medicines actually makes it from the lab to the pharmacy.
My freshman year college chemistry lab partner went on to become like this crazy smart dude, played a wide receiver in the NFL, then became a scientist, astronaut, space shuttle. Crazy. And I was like, dude, can you carry me in this chemistry class? Because I'm not really into it. And he was super smart. So, and then that he didn't peak there. He didn't peak in the NFL. I guess he peaked in flying around in space. So good there. What's the next thing that you're looking for in the pharma space here? What's the next big mover here on a company level that you're looking at?
For weight loss specifically, or just more broadly?
Yeah.
I think
everything.
Actually, Merck is working on, speaking of pills, they're working on a pill version that would be basically a superstatin. It would lower bad cholesterol to a level that cannot be done with oral medicines that exist right now. And that it kind of follows this same trajectory that I think we're seeing. Big pharma companies years ago, after statins went generic, kind of moved away from primary care medicines because it's difficult. You have to run big trials. It's expensive. If they fail, you lose a lot of money, and move toward oncology and rare diseases. I feel like we're seeing, and I think GLP-1 was sort of the Trojan horse in some ways of this, we're seeing the major drug companies move back toward primary care, trying to invent medicines that would be taken by millions of people and that would actually address the number one killer of Americans, which is heart disease. So I think that's a trend that I'm following, and we'll get data from that Merck pill, I believe, by the end of the year.
All right. I mean, you and Sam Fazeli, you guys do whatever you do in that healthcare thing. Just tell us when something important is happening. Sure. Damian Garde, healthcare reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. You know, back in my trading days, man, I'd go to my healthcare guy and say, hey, can I buy Lilly today? It's down 15%. I mean, it feels like an entry point to me. And hopefully my analyst will have a good idea what's going on.
It's just such a competitive space. I mean, you hear the GLP-1s are supposed to lower cholesterol, but then you have he was just talking about another cholesterol medicine coming out.
But I mean, these GLP things have been, I see a news story every day how they help this, they cure this, they lower the risk of this. It's not just, so I don't know what's going on. But I tell you, the healthcare space is a tough one to invest in, I think. That's why there's MDs and PhDs all over the place in investment firms investing in that space.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
When was the last time you went to a movie at a movie theater?
Oh, it was a tough one. We were supposed to go the other weekend and see like Superman, but that didn't happen. I watch a lot of them. Like I stream them. Like for example, Minecraft. Like I saw at home, and then I didn't go to the theater to see it.
Right.
And that's what like Warner Brothers is dealing with.
Yeah, exactly right. So, but I mean, Warner Brothers Discovery, they put out results. I don't know. I mean, my expectations are really low for this company, but I thought they were pretty decent. The stock's trading off a little bit here. But let's get the latest on what's happening at Warner Brothers Discovery. And even maybe a little bit on our friends at Peloton. Jen Sherman's my buddy there. She's the person I train with.
Of course.
Geetha Ranganathan, I'm not going to do it with some dude. I mean, why would you do that?
She's your friend in your head.
Exactly. We're friends. So Geetha Ranganathan, she actually is the analyst on all this media stuff. She's down there in our Princeton University sprawling campus. Hey, Geetha, talk to us about Warner Brothers Discovery, because there are like a lot of traditional media companies trying to make that transition from the good old days of linear television, cable television, all that kind of stuff to the streaming world. What did you learn from Warner Brothers Discovery?
Yeah, so Paul, what we really saw was, a continuation of the same. So the streaming business is doing really well. The studio business is doing extremely well. But TV networks, which is really 80% of their EBITDA, is still struggling. And we saw a 25% slump in their TV networks EBITDA. So, that continues to be a pain point. And while there was initially some, obviously some excitement about the turnaround in both the streaming and the studio businesses, the fact that there is absolutely no respite in sight for TV is extremely distressing.
And that's why their shares are down like 7%. Yeah. Okay, so talk to me about the company's in the process of splitting itself into two separate entities, right? So where do we stand with that? What are the pros and cons that go along with that?
Yeah, so this is, one of the best ways for them, or at least, the fact that they've kind of decided to do this really follows a pattern in most of the media landscape where they're kind of separating the low growth assets from the slightly higher growth assets, the low growth or the no growth assets being the TV business. That for Warner Brothers, that split will happen in the middle of next year. And really the strategy here is to unlock shareholder value because they combine their Warner Brothers business with the Discovery networks. Of course, that really hasn't gone anywhere. And so finally, everybody in the media world is doing this, where they're kind of separating out the secularly challenged TV networks. The only problem here is that we still really don't have a very clear strategy, so they have to really outline that. And I think that is part of the reason why we're also kind of seeing this, the decline in shares this morning.
All right. The studio had a good quarter here. Some hits like Sinners, a Minecraft movie, Final Destination, Bloodlines, and things like that. Talk to us about the studio and maybe it's kind of its forward slate. How's that look for the company?
The forward slate actually looks really good, Paul. They just had their major DC reboot with Superman. And what they're really trying to do now going forward, I mean, they didn't have a Superman movie for years. Their DC strategy was a mess. They had so many movies out there. It was all confusing storylines. But I think finally they've they're going to right that ship. So they've committed to a pretty strong slate of about 12 to 14 movies going forward. The big thing for them is to really get studio EBITDA to about $3 billion. And they seem to be well on their way. I mean, last year was a complete mess. This year, definitely much, much better. They're actually, if you just look at box office performance overall, they already have about a 25-26% share of the domestic box office. So they're only very slightly behind Disney. So they're definitely doing well. And their strategy is working. They have a pretty good content pipeline.
All right, let's switch over to Peloton. How is this company doing? I mean, is there subscribers? Are they continuing to come in? Are people still using this equipment as much as they used to?
So for Peloton, really, and the story has not been so much on subscribers. Unfortunately, it has really been more about trimming the fat, literally, at the company and kind of getting profits into full focus. And if you just saw this quarter's results and what they reported for the full year for fiscal 2025, I mean, the progress that they've made in terms of profitability has been absolutely outstanding. So they reported adjusted EBITDA that came in about 19-20% higher than guidance and consensus. Their forward guidance, so fiscal 2026 adjusted EBITDA guidance was also way above consensus. So the way that they're kind of optimizing their operating expenses has been absolutely stellar. Just everything in terms of workforce reduction, in terms of inventory management, OPEX costs, marketing expenses, everything has been absolutely top notch. The only problem for them is reinvigorating demand. And that's where, we're really seeing this disconnect because the financial metrics are really good, but the subscriber metrics, unfortunately, are not.
Is there a credible plan there to reignite growth there? It feels like, everybody who's got one's got one. How did they talk about that part of the story?
Yeah, so it's really going to be a little bit hard. On the margin, I think they can do some things to kind of reignite a little bit of the hardware sales. But in terms of a sustainable go-forward strategy, that is really still pretty unclear, Paul. So I think right now what they're really trying to do is, again, really get more costs out of the system, maybe increase subscription prices a little bit, so kind of pad that top line a little bit. But in terms of the overall subscription growth story, I'm not so sure that's really going to be a volume story. I think it's going to, focus more on kind of rates and price and improving pricing.
And Geetha, how much of that, cutting costs includes cutting jobs?
Yeah, they did actually, announce a 6% workforce reduction as well. So a lot of it is going to come down to cutting jobs.
All right. Hey, Geetha, just one quick thing on Warner Brothers Discovery. What's the timing of this separation?
It's going to, so they announced the formal plan in June. It's going to happen by mid-2026, so by middle of next year.
Ooh, okay. All right. We'll keep an eye on that. Geetha Ranganathan, she covers all the media stuff for Bloomberg Intelligence.
Is
She's
that
down
like
there
a good move for them to split? I mean, you see Comcast do it, right?
Yeah, I think it is, simply because you hope that the two parts have more total value than they do together. And so you're concerned that the high growth business is being pulled down by the slower growth cable networks. So you split them out and see how far this, the streaming business and the studio can fly, I guess, is kind of the thought there. So we see it all the time in lots of different industries, and there was a time, when all these assets made sense to be together, but the fortunes, the economic fortunes of the cable network and broadcast network business have been permanently damaged, and it gets worse every year. So, you just got to cut those out and see how they trade on a standalone basis. Maybe ultimately they get acquired, or maybe some of these networks maybe get together. The Comcast stuff maybe will get together with the Warner Brothers stuff and just become bigger and get some cost synergies. So we'll see how that plays out. But we're seeing that across the media space here.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Intel coming into the crosshairs of President Trump today, particularly the CEO saying he's got to go. I mean, I have no idea where that came from. I'm guessing Mandeep Singh is read up on this, if nothing else. Mandeep Singh, senior tech analyst for Bloomberg Intelligence. Mandeep, President Trump calling for the CEO of Intel to quit. He says he's conflicted. Can you give us the backstory? What's going on here, as far as you know?
I mean, most likely it has to do with the minority investments that the Intel CEO has in companies within China, and they may have some ties to the Chinese government in some way. And look, he used to be a VC. So this guy has had multiple roles. He used to be the CEO of Cadence, then he was a VC with multiple investments in startups across the globe. So I'm guessing the Intel board, before they appointed him as the CEO, did their due diligence in terms of looking at all these aspects. And to my mind, I mean, it obviously is a surprise that his credentials are being questioned here, given the reputation he has in the Valley.
Is he an American citizen?
I'm not sure.
Yeah, okay.
Probably he is, but I mean, those are the type of things you would expect the board to do their due diligence on. For a company like Intel, which has had multiple CEOs and clearly is looking for a big turnaround, a lot of people felt this guy had the credentials, in terms of having the experience to turn around a big ship like Intel. And I mean, so far it's too early to call out how good of a job he was doing. Still early days with his strategy, but clearly he has plans to keep the foundry business and turn around the core chip design business. And he has raised a lot of cash. So I would say still early days with his strategy, but this clearly puts a wrench in terms of his strategy.
Just
and what
look,
he was doing.
as per Wikipedia, it says that he is a Malaysian-born American business executive. So that's all I got.
Well, something you brought up, you said they probably, people already knew about this. This is no secret. My question is, why now? Why bring this up now? Why the timing now? And the company's been struggling, right? Its shares now are down, they're down 3% this morning. But why do you think this is taking place now?
I think it's because Senator Tom Cotton, he wrote a letter to the Intel board. They obviously found out some things that the senator highlighted, the links to some of the Chinese companies, small companies that had ties to the Chinese government. And I think the board probably has to come up with an answer in terms of the concerns that were raised by a senator.
Has the company responded at all to either the senator or the president?
I mean, they have in terms of the initial response, but to the best of my knowledge, I think the board clearly is defending, the credentials of their CEO, and there's nothing here that would put a question mark around the future of Lip-Bu-Tan in terms of running Intel, at least for now.
Well, that's what I was going to say. Do you think he would step down? How long has he been in the position? Not too long.
A few months, yeah.
Exactly.
Yeah.
So how is the Intel call here? I mean, the stock obviously underperforming pretty dramatically here. It's flat year to date, but relative to tech, that's just losing ground dramatically.
They are, and this brings back some of the discussions we were having a few months back before Lip-Bu-Tan was appointed as a CEO, that Intel may be broken down, Qualcomm may be looking to buy parts of Intel, and then the foundry business would be separated. I feel if for some reason this CEO has to step down and someone else is appointed, then it brings all those discussions back into play, because so far what Lip-Bu-Tan had maintained was he wants to keep the foundry business. He wants to turn around through a strategy that involved keeping the chip design and the foundry business together. But if that wasn't to be the case, and if there's somebody new, then I would say that whole aspect around breaking up Intel comes back into play.
All right, the stock is down 3% today, so it is feeling the impact of that. Mandeep Singh, thank you so much for joining us, senior tech analyst for Bloomberg Intelligence, joining us here in our studio. Again, the headline: Trump urges, quote, conflicted Intel CEO Tan to resign immediately.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.